For all the discussion on the fiscal deficit, revenue collections, expenditure and so on, the one thing that everybody is interested about in every budget is whether they are personally getting any tax breaks out of the budget proposals. On this count, this budget has actually given away a lot of tax breaks to the middle class. So let's look at the key tax proposals that will affect you and me. The first thing, basically for the last 5 years or so, there have been hardly any changes in the tax slab on the basis of which we calculate the income tax rates. So currently, for the first 2.5 lakhs of our income, we were not paying any income tax. If you were earning between 2.5 and 5 lakhs, there was a 5% tax rate. Between 5 lakh and 10 lakh, you were paying 20%, and beyond 10 lakh, the tax rate shot up to 30%. This year, what has happened is, in the budget, the finance minister has announced that for up to 5 lakh of initial income, actually you will get a tax rebate. So you will not be liable to pay any tax on this first 5 lakhs of income. But this has not been actually done through a straightforward increase in your exemption limit. Instead, what has been done is, you will have to calculate your tax for the first 5 lakh of your income, and after calculating the tax, you will have to claim a rebate under section 87A of the Income Tax Act. The estimates are that this can result in savings of up to 13,000 a year for people who are paying tax, especially if they were in the 4 to 5 lakh bracket. A second tax break for the middle class is actually relating to standard deduction. The standard deduction is a reduction given from your income for salaried employees who actually commute to work and therefore incur various expenses, transportation costs, you may be eating out because you come to work and so on and so forth. Standard deduction is intended to meet these expenses. Earlier, the standard deduction was at 40,000 rupees a year. So from your total income, along with deducting the first 2.5 lakhs, you also used to deduct the standard deduction. Now the amount has gone up from 40,000 to 50,000 rupees, and you can deduct this also from your income in order to calculate your final tax liability. Now, we know that up to 5 lakh of income, that rebate has been granted only to people earning less than 5 lakh. But even people at higher income slabs can actually avail of the standard deduction benefit that has been given, though they will not get that rebate benefit. The third proposal relates to TDS, which is tax deducted at source. In respect of certain incomes, when a person pays us that income, they are supposed to deduct the tax at source and remit it to the tax department. When we invest in bank deposits, post office schemes and so on, as we receive interest each year, a sum is deducted right at the outset as TDS. For people who are not in the taxable bracket at all, say people who are earning less than 2.5 lakhs a year, the TDS is still deducted because it is an auto deduction, and people have to give in certain forms like Form 15H to claim that deduction. What the FM has done is simplify life for such investors by saying that if you receive interest of up to 40,000 rupees a year from your bank or post office deposits, there will be no TDS deducted on it. This is a big relief for people who invest quite heavily in bank deposits or post office deposits. A similar benefit was already available for senior citizens, so it may not make a big difference to that section of the population. A final set of benefits is for home buyers. As you all know, if we own a home anywhere in India and we sell that home, we have to pay capital gains tax on the gains that we have made relative to the cost that we used to purchase the home. Now, the capital gains tax is calculated after indexation. Earlier, the provision in tax law was that if you invest the proceeds of that home either in certain bonds or in another house for your own residence, that was exempted from capital gains tax. This year's budget, what it has done is, it has allowed you to buy up to 2 homes with the proceeds of selling 1 home. So this gives you more flexibility to look out for homes in the areas of your choice, or for spreading your sales proceeds over 2 homes which you can bequeath to your children and so on. Up to 2 crore of capital gains from this source is allowed to be exempted from capital gains tax, but this is allowed only once in a lifetime. Nevertheless, it's quite a big benefit for people who are looking to actually sell 1 home and buy another in any city or suburban limit of India. The other significant thing that has been done in this budget actually does not relate to your tax rates. It relates to the tax procedure. So the finance minister has promised that Hereafter, the smaller returns or income tax returns filed by assessees will be processed within 24 hours. And if there is a scrutiny assessment of these returns, they will actually be done entirely online without you having to go and meet the taxman. People who have received these notices from the IT department know how much of running around they have to do in order to meet the assessing officer and convince him. Therefore, if you are indeed able to move to this 24-hour processing and the scrutiny which is wholly electronic, it will be a really big procedural relief for taxpayers also. So you will notice that though the tax relief given in this budget to various segments of taxpayers may be small in themselves, when you add it all up, it adds up to significant relief to people on both the procedure of dealing with the taxman and on the actual taxes that they pay. The government has also been careful to target these tax benefits only to lower income earners so that the rich don't benefit from the tax giveaways in the budget.